Hello and welcome to this week's College Investor Live. I am excited to be here with John from GradGuard. And GradGuard is a really cool product that I stumbled on a couple years ago because they cover tuition insurance and dorm room renters insurance, which, renters insurance in general, but let's just say it's targeted for those in the dorms because those are some unique needs. And the reason I found it is because we had a lot of students reaching out to us that said, hey, I can't get regular renters insurance and I am worried, and or my college is asking about it. Where do I go? And so I found GradGuard, and they've been on my radar for a couple years. And so I am excited to be here with John. And John, you want to just give yourself a quick intro here while
Yeah, Robert, thanks for hosting this event, and really thanks for everybody who might actually tune in this afternoon. Hopefully this is just a really great discussion. I mean, we started GradGuard 14 years ago, and since we started it, we've been pioneers in really identifying the risks and helping families protect themselves and protect their investment, which is what you're so good at. For paying for college. I mean, college today is the second largest investment in most families' lives, next to a house. And the Wall Street Journal just today had a really important article by Melissa Korn that basically said in the last 20 years, there's no other consumer purchase other than gasoline that's increased more in its relative cost. Healthcare is even behind higher education. And really, a lot of people say, well, why is GradGuard a thing? GradGuard's a thing because the cost of college has grown so dramatically. It certainly wasn't necessary when I was at Arizona State in the 80s. I only had vinyl records. Most of the dormitories didn't have sprinklers in them. The damage that could be caused is really minor. But today, almost every student has several $1,000s of electronics. Every room's got sprinklers in it. And a typical sprinkler damage is around $60,000, and most students can't pay for that type of damage. And then tuition insurance also wasn't really a thing. Today, more students go to college than ever before, right out of high school. And many of them have vulnerabilities health-wise. Almost 20% of students arrive at school with chronic health conditions. And there are traditionally a lot of things that emerge health-wise, whether it be Crohn's disease, mental health issues, that really emerge in your early 20s, creating real risk to the payments you're making to school for both tuition, housing, and academic fees. And I always say that, it's not realistic to expect a refund. These universities are nonprofits, but as we saw during COVID, they don't have the cash flow to be able to afford to provide refunds, even if they would like to.
I mean, you nailed it. I think they might call themselves nonprofits, but let's be honest, they are still revenue maximizers, even if they're not trying to, make anything for like a shareholder per se. They're definitely not in it to give you a deal. And one of the stats that I saw, you touched on various risks right there. But one of the things that really stands out to me is 1 in 4 freshmen don't necessarily come back. And I want to say that the graduation rate in general is in the 60 to 70%. So it's like people go to school and they don't finish school. And so there's a huge financial investment there.
Yeah, Robert, you nailed it. You absolutely nailed it. It's like, so imagine 1 in 4 cars not working next year. And you just spent $50,000 in the car, and 1 in 4 is not going to drive next year. Now, the truth is, I don't think education is ever wasted on someone. But to get the real value of your degree, you need to complete a credential. And, I think the truth is, for lots of reasons, including a lot of legitimate reasons, tuition insurance is not dropout insurance. We cover legitimate reasons like getting a concussion, like having mono, having a mental health issue, an accident, an injury, even a parent dying, or even addiction. Those are all covered reasons and legitimate reasons why you might leave school and not be able to complete a semester. And what we say with tuition insurance is that, if you can't afford the cost of an extra semester, you're very smart to buy it. And it's not that expensive. By the way, it's similar to travel insurance, but travel insurance is for like a $300 or $400 airline ticket. We're talking about a $10,000 or $15,000 or $30,000 semester. And most families I know can't afford that type of severe loss. And so we're really proud that what we've created is the first time in the country that we're able to protect students wherever they go to college. They only have to buy the coverage before the first day of school. And there's no gotchas with it. The best way to buy it is through your school. We work with over 500 universities today where GradGuard is provided to students. And that's the most affordable way to get the best protection. And it's working. The truth is, the National Student Clearinghouse, where the data came from for 1 in 4 students not completing or not returning for their second year, their same data in 2021 indicated 113,000 students left school prior to the end of a semester. So those same students, if they spent, say, $16,000, $17,000 a semester, they lost over $2 billion. GradGuard's the only way to protect that investment, and we're happy to do it.
Yeah, and I think you made an interesting point about the value of a college education really ends with that piece of paper. I think education, like you said, is, priceless, and it's not about that. And maybe the education is you learn that college isn't right for you, and
Right.
like you need to go and do something else in your life, and that's fine. But education to me can be free. There's so many free resources, low cost colleges, community colleges, whatnot. Going to a 4-year school is expensive. The average price tag, I think, for in-state this year is almost pushing 10. And like the average price tag for out-of-state tuition is in the, I don't know, even more than that. Then you tack on room and board, which, is usually 2 to 3 times the price of tuition. And, it's a very big amount of money that, students could be spending, or families, right? Because it's usually a family decision to go there.
Robert, I think your whole website does a great job of helping millennials and other people make great decisions. And really, that's, I think, the most important thing that I would say to all families is you should have a buyer beware kind of stance when you're paying for college. I have 5 children. I've got my second son's finishing his senior year. And I'll tell you, his experience at UC Berkeley has been fantastic. My oldest son went to Arizona State, had a terrific experience. I think most universities are really committed to promoting student success, but they can't necessarily afford all the reasons why students might make a mistake or need to leave school. A school can't be expected to replace your stolen bike or stolen backpack. The truth is, all those things happen, and families should not expect these institutions to take care of their kids the same way they might. And so that's where GradGuard steps in. We provide a refund when schools don't. We replace stolen or damaged property when schools don't. And we do it really affordably. The only way this works is we work with 500 universities, actually over 515 now. And what that looks like is that we help students at NYU to USC, to Purdue, to Alabama, to Tennessee. And it's that network of students that we protect that help us provide superior coverage. And there's really nobody that does what we do. So my recommendation is ask your university for GradGuard. If they don't already have it, ask again, because it's the best way to get coverage. If your school doesn't have GradGuard already, it's costing you more money to buy it directly through GradGuard than it does when the school offers it to all their students.
Oh, yeah, that's good to know. So let's talk about some practical nuts and bolts here. So if you can, let's talk about tuition insurance first, because I know they're kind of hand-in-hand products. But if you are looking at tuition insurance, like what would you say like the 3 biggest risks that a student, or maybe that you pay policies on? Like, what is the real world like payout look like on the biggest risk there?
So the number one reason students don't complete a semester is really due to mental health conditions. Emotional stress, according to Gallup and Lumina, is one of the major reasons. And we all know this generation is particularly vulnerable post-COVID to anxiety, depression, a number of mental health issues. And the truth is, it's hard to predict if some anxiety is going to lead to depression. Some mild depression might lead to even greater depression, where you're just debilitated and can't complete the semester. What tuition insurance is really designed to do is to give that student a do-over, to give that parent and family the opportunity to say, I'm most concerned about your well-being. I'm not worried about the financial loss. Take the financial stress off the student and that family and do what's best for the student, which means if you need to come home, don't have any shame about that. Take care of yourself first. Don't worry about the financial loss. And the really great thing is our programs, our tuition insurance is really affordable. It's 1.1% when a school offers it. So for $10,000 of coverage, it's $110. I mean, it's a really good price. And our mission is to make it affordable to protect yourself, right? And then to make certain there's no gotchas. When we work with universities, there can't be any gotchas. So the best example, typically, like, we're not health insurance, right? So, but we, in the example of like pre-existing conditions, if you're well enough to start school, our coverage will work. Now, if you have a pre-existing condition like Crohn's disease or a mental health condition like depression, it's important prior to starting school to get clearance from your doctor that you're well enough to start school. And with that clearance, and typically it's just a note to say you're well enough to start, we will provide coverage if your son or daughter has to leave for that reason. And that's the important piece. Is we're not trying to fool anybody into buying insurance. I'm not an insurance guy for the most part. I spent my life looking for big problems to solve. And we think the 19 million students who pay for college every year really deserve the opportunity to protect themselves from a disabling like financial event that really would disrupt their education.
So you got mental health is a big one. I'm guessing regular health is coming up right at number 2.
Regular health, yeah. And so 2% of college students get mono every year, according to the American College Health Association. 2%. That's not that. I mean, this is a high density environment, pretty social environment. And now I forget exactly the number of students who get concussions, but again, concussions are very common and they can be really disabling. Accidents, injuries, car accidents, and these things. So those are the top 3 reasons. But don't underestimate other conditions like addiction or even the death of a parent. Parents sadly do die unexpectedly, and that can be so disruptive that you need to leave school. And then we cover those legitimate reasons why you might need to leave.
I think too that a lot of these reasons, not all of them, but a lot of them don't also mean that you leave school forever.
That's right.
like you just need to take the semester or the rest of the year off and then look at re-enrolling. And like you said, the university will typically give you grace and let you defer or postpone it and do all that if you have a legitimate thing, but it just comes down to that cost piece, right?
Yeah. So a couple things. One is universities typically don't give your money back after the 5th week of school for any reason. And if they give you your money back, it's only for tuition. You won't get housing or academic fees paid. We'll pay housing and academic fees in addition to tuition. So many schools are moving to the first 15 days. That the only first time you'll get a refund will be in the first 15 days. So those are 2 things that are important. Don't pay your college bill without looking for the refund policy of the institution. Just like any other purchase, you should know what the terms and conditions are. And the refund policy should be easily defined. Just go to the search button on your .edu page and you'll find it. This key is that if you want to protect your investment, you have to purchase tuition insurance, just like travel insurance, before your flight or before the first day of school. So that's why this is really timely to have this discussion. This is the right time for families to evaluate the refund policy, evaluate whether or not they can afford the extra cost of a semester.
It's so low cost. So then we have renter's insurance policy. And to me, it's specifically, I guess, student dorm room, student policies. A lot of dorm rooms, I would say 10 years ago, it wasn't a thing where dorm rooms didn't require insurance. And then now it's like, I would say a lot of them are like, hey, you need to get a renter's insurance policy. But then I would say a lot of the traditional insurance companies are like, we don't do dorms. And it's this weird issue, right?
It's a weird issue. We designed GradGuard's tuition or renter's insurance specifically with the University of California in mind and taken it nationally. And the problem with traditional renter's insurance is they typically require a credit check. Students don't have good credit, so they pay more for it. There's typically an electronics limitation of $1,500 on almost all of them. So a backpack's got $3,000 of electronics, or your dorm room does. And that's a gotcha. That's a classic one. And the third reason why renter's insurance by a traditional agent isn't smart is that they typically require you to maintain your address. Well, students are moving all the time. They may move from one dorm across campus to another dorm. We take the address on file with the university, so we'll know that. And then the last thing is students are mobile. So our property coverage is worldwide. And so if you're on spring break, if you're returning home for Thanksgiving or Christmas, you still have coverage. And then the last thing is most of the policies sold by the traditional industry have a $500 deductible. And so $500 deductible sounds like, okay, as an adult, we can deal with that. But for a student who has a $500 bike, that means they have no coverage. Or a $1,000 computer, you only get half of it back. Our deductible, or standard deductible, is $100, which is just, again, for $12 a month on average. Our renter's insurance is perfect for college students, and you can take it on campus. The 3 million students who live on campuses, they can buy it there, and they can use it off campus as well. A lot of off-campus apartments require their students to buy coverage, frequently from a provider they are using. My recommendation is keep GradGuard the whole time. It's a better policy. We pay claims every day of the week, and it's really just a smart purchase when your young adult student is living on their own for the first time.
Well, and to me, like, I also think that it's almost like a misnamed policy, because they call it renters or dorm room insurance, but really it's for your personal property. It's like personal property insurance should something happen to it. So like you said, I'm guessing, like, if your bike gets stolen, if your laptop gets stolen, your backpack out of the library, like, that's where this comes into play. Or, if like your dorm room flood. I've seen this where I feel like I saw a TikTok video recently where someone knocked the fire sprinkler in the hall, and like their whole dorm room just got flooded out, right?
So it is true. Our insurance covers all their personal property, just like you described, with no gotchas, no depreciated coverage, all the usual gotchas in insurance. The key for us is renter's insurance does two other things. Our HO4 policy pays a liability coverage. So that student that hits the Frisbee, that throws down that turns on all the sprinklers, the whole floor is ruined. Everybody's electronics is ruined. It's not just your one room. The claim we're paying is $60,000 for when the sprinklers go off. The other thing is, in just student housing on campus, on average in the last 10 years, according to the Clery Act, over 1,800 fires are reported on college campuses. Wow. 1,800 fires. So the probability that you will know a student on campus that has experienced one of those losses is real. The real question is, it's going to be your son or daughter, and can you pay for it? Now, there are people out there, some personal finance folks, who will say, oh, don't worry about it, you've got home insurance. So homeowners insurance sometimes covers students, but it's not really a very practical way to file a claim. If you have a large claim, do you really want to file a claim on your homeowner's policy, where then your premiums are going to go up? You probably have a high deductible. It's really an impractical way to protect your student. I totally believe that if for the $12 a month GradGuard charges, it's really one of the best purchases you can make when you're sending a student off to college.
Yeah, I mean, just the price point is so like, just it's an easy one to just say, like, yes, that makes a lot of sense, because especially here in California where we are, if you file a claim on your homeowner's insurance, every insurance company's like, we're leaving the state, so we're going to drop you as soon as we have any reason to.
You're absolutely right. If you nailed it, Robert. I mean, that's the truth of the industry right now. Is this is maybe the hardest time to get insurance for your home or your car. You don't want to create reasons why an insurance company might raise your rates or drop you. Buy a renter's insurance policy in your son or daughter's name. The only other practical thing I would say for students living on their own for the first time is take pictures of your receipts. My own sons, both of their bikes got stolen. I think my oldest son had 2 bikes stolen, and they're not inexpensive bikes, but they're not mountain bikes or electric bikes or anything like that. But what the key is that you want to take pictures of all your receipts. Most students and families are spending a lot of money on their computers and their books and their backpacks. Just take pictures of all the receipts, so it's really easy to file a claim. We want to pay claims. We want to pay them quickly. Typically, the things that slow you down is you don't have proof that you owned it. So all you do is take pictures when you're moving in. All the stuff you buy, just take pictures of it, and you'll be able to demonstrate that you own those. You can go to our YouTube site with GradGuard, and you'll see all types of claims we've paid. We've paid for water damage that was sprinklers and even pipes that have burst in residence halls. The university is not responsible for your property that gets damaged, even if they do it. All right. So you need to have take responsibility. This is like financial literacy 101. This is adulting. Nobody's going to pay for your stolen or damaged stuff. It's unrealistic to expect the university to.
This is just a question I have. So your dorm room gets flooded out. Who's responsible for like where you're going to live for the next month or whatever it takes to get that repaired?
Now, so again, renter's insurance, our renter's insurance policy, the third thing it does, we pay for property loss, We pay for liability that you may unintentionally have caused. And then the third thing is we pay up to 10% of the policy for loss of use. So if you need to live in an apartment for a week and you've got a $10,000 policy with us, you have $1,000 credit to pay for the hotel for that week. And so the loss of use coverage is another nice feature. Again, that's what makes GradGuard's renter's insurance really a perfect fit for college students.
Yeah, that makes a lot of sense because, like, I mean, you know, especially if you're off campus. I feel like if you're on campus and it wasn't your fault, sometimes they'll help you out. I see these kids getting put up in a hotel, the dorm will, but you know, you might not.
They might put you in a dorm. I've seen that happen. But if you got a policy, you'll be able to dictate that, and you'll be able to not worry about it. You know, I think the truth is, if you talk to many college families or many students, you're gonna hear stories of theft and crime and fires and water sprinklers. You'll just guaranteed to hear it. And if you're following Barstool Sports, you'll see it every week. I mean, it's just a reality of college life. And the truth is, we're really happy with our insurance company that's worked with us to build this product because claims are real. Knucklehead college students do knucklehead things sometimes. But the third real thing that students need to be aware of is they're vulnerable to crimes of opportunity. And so many thefts occur from other students or other people who look like their students. It's pretty easy to blend in, and students can be just, you know, absent-minded and leave their backpack while they go get a cup of coffee. And that backpack is picked up by another person who's not a student, but looks like it. ASU's Department of Public Safety, their head of police just a few years ago called ASU a mall for thieves. And that's the reality. The crime data supports it both by the FBI and Clery Act.
Well, and it's just everything's so expensive now. I mean, you get a laptop these days, you know, $1,200 for a MacBook. You got a monitor. You got all kinds of stuff. I mean, textbooks. I was talking about textbooks today alone too, and it's like $150 for a math textbook, and then you know, $140 for a biology textbook. I mean, that backpack could easily, like you said, have $3,000 worth of stuff in it.
A typical backpack's $3,000, and a new backpack, or a new freshman student. I mean, it is everything in that backpack can be resold on Craigslist. Everything has got a secondary market easily that's in that backpack. So again, you know, I don't want any bad things to happen to students. And our goal is to help remove those obstacles, remove those disruptions in a semester. So a parent and a family can just help that student get back to class. The schools we work with care about their students in really unique ways. They make certain that they can overcome these things. And they're educated about it. They pull out the fine print from the lease and says, the school's not going to replace your stolen or damaged property. They highlight the fact that the school's not going to provide a refund. The schools we work with are probably the most committed to helping their students overcome these real life risks.
Well, and it just makes sense. And I think it goes back to, like you said, adulting and knowing what your finances are.
Yeah.
If you feel fine, you know, don't want to pay $10 a month, but you'd write a $3,000 check if it happens, well, okay, but like, you know, you could pay your monthly GradGuard renter's insurance fee for all 4 years of college. And if something happens, you are so net positive.
Yeah.
Like it
seems like a no-brainer. I mean, the truth is we feel good when we pay claims. We want to help people through those things. And we know that the risk is real because we're paying them. So,
yeah, I mean, so this is, I mean, besides like buying a house, I do think college is the #2 biggest expense families have. And so they're like marinating on this decision. It's a family decision. Like, who do you see is the main decision maker, or like, where does like the GradGuard or the insurance come from? Like, does the school typically mention it? Are parents, like mom and dad, looking for it? Are the kids looking for it? Like, who should be thinking about this?
Well, it's a great question. I personally, I think families do make these decisions frequently on their own, like independently. So a student will sign up for their lease, and then they'll see in the lease process that GradGuard is embedded in that process, and they're told about it. Frequently, they're using their parents' credit card to pay for their deposits, and that's what we'll take payment for. The same thing is when you're paying your bill at NYU or Harvard or Purdue or any number of schools we work with, you're given the opportunity, just like travel insurance, to say the school's not going to give you a refund, but GradGuard will. And so you just sign up for the purchase right there. So it's really in that path. I would say a large portion of our students that are the first person who sees it, then have their parents buy it, or they use their parents' credit card to buy it.
So it comes up in that financial aid. So let's just say, because we're recording this August 10th. So they signed those final docs last week. School starts in 2 weeks, and they're marinating on it, and they're like, "Oh man, do I go back to the school's financial aid office? Do I sign up direct? Like, what's the best way that I could add this policy
my
on
recommendation,
right now?"
Just go to GradGuard.com. And
Okay.
at GradGuard.com, if your school works with us, like say UC Berkeley or Harvard or Princeton or any number of schools, you're going to get the lowest price through GradGuard.com. That's offered. If the school's participating and working with us, that's where you'll be guaranteed the best price. If it's more than 2%, that means your school's not working with us. And then you should ask the school why aren't you offering GradGuard? It's a pretty simple thing. And so every school can work with us. We do not pay schools. Schools do not make money from this. This is about a student benefit that helps their students overcome real risks of college life. And so, in my view, don't go to college without GradGuard, but also ask the schools that you're going to if they offer GradGuard, because it's a real feature of being able to protect yourself.
Because I just want to highlight, right? Like the money that, let's just say you did have to pay a claim. Let's say you drop out of school and you're paying a claim. The money's going back to your pocket, not to the school, right? Because the school's already kept their money. They're not giving it back.
Yeah. So there's two things. Sometimes the school, you owe the school money. And so they are a beneficiary, almost like when you buy renter's insurance, like rent-a-car insurance. If you wreck your car, the car company is going to get their money first, and you'll get the balance for any damages or injuries to yourself. So in our case, if you owe the school money, the school gets their pay, whatever you owe them, and then you get 100% back up to the coverage limits you've purchased. So, you can't really make money on it. The only thing we don't pay for is student health insurance, because if you have paid student health insurance, you actually haven't lost anything. You still have the health policy.
Yeah.
We pay you for the real loss, academic fees, housing, and tuition. And if you're on a scholarship or a Pell Grant, all that means is your net cost is lower. And so you need less coverage. And what I'm really pleased is you can buy exactly what your tuition bill is. Whatever your out-of-pocket cost is, we can cover up to 100% of it. And that, again, before GradGuard, it wasn't possible for families to be able to protect themselves. The only students in the country that could do this were attending elite schools like Harvard and Princeton. Now they're all working with us. And I really feel good that this is now kind of a ubiquitous offering. So students at Alabama, Tennessee, Texas Tech, Texas A&M, Oklahoma State, Berkeley, it's public universities and private institutions. It's not just rich people can protect themselves today. Now everybody can.
Well, I would say even if you're going to some of these public four-year colleges, state schools, they're charging a fortune now too. Like it used to be that, the local state school would maybe be like $800,000 a semester. You get out for like under 10 grand. Now those are regularly $6,000, $7,000, $8,000 a year or more. And so you could still be seeing quite a large bill, even if you're going in state.
Yeah, I think every school, every college today is relatively expensive. I will say, you mentioned something earlier about, we're just trying to help people get their money back, get a do-over. One of the things we did a survey of all the people we paid tuition claims to. Over 75% of the people we paid claims to returned to campus, returned to college. And that's really our goal. Our goal is to get you back on track. You don't want, when you have a student in crisis, they called you, I've had a car accident, I've got mono, I can't go on, I'm overwhelmed, whatever it might be, you really want to first worry about the well-being of your son or daughter. And then you worry about the financial consequence. And you typically have two problems if you don't have tuition insurance. You've got a student in crisis and you have a financial loss. We want to take away that second problem.
Right. And because that financial loss ends up just compounding the original problem. And I think it really becomes hard for these students. And I think that's great to even hear, because to me, a lot of the covered issues, like everything sounds so permanent. And I also know this, I talked to a lot of 17-year-olds and 18-year-olds lately. And so everything is just like a permanent decision in life, even though it's not, right? But they don't see this yet.
They don't see it. Like I said, I've got 5 kids. I know it. I think that this generation takes themselves very seriously. They are very serious, but they also have more vulnerabilities as a result. And
Yeah.
I just think that it's a really unusual time. I do think that the college is worth it, but it's mostly worth it when you graduate. Most of the student loan problems we have in this country are, in fact, 80% of the student loan defaults that occur are from students who did not graduate. And so just keep that in mind. I mean, the real goal here is to help people complete their degree. If you're going to invest, you want the credential. You want to make certain your son or daughter has really thought carefully about their own motivation, their own well-being, and their own health to be able to complete that semester. Every semester you start, and it's just a smart, prudent way. And I like to say that families are in this together. You have to have some difficult real life conversations because these investments are not small. They're substantial, and you're in this together.
You're 100% right. And I hope parents can realize too, as they're helping these kids, that, the end goal of this is to have them into a career and earn money and make that investment worthwhile. And you've got to cross that finish line for it, because you highlighted it. A big part of the student loan debt crisis today are the people that didn't graduate. They spent tens of thousands of dollars, and now they're not seeing the financial benefit because they didn't get that diploma, that piece of paper at the end that said they did it. And that's a real financial struggle. So now you're trying to pay the bill, student loans, and you're not earning that income level that can help do it, right? And so
it's, I mean, that's in a nutshell. The only other thing I'd say, for your audience beyond what GradGuard does is the other risk to really think carefully if you're borrowing for college, especially if you're taking out private loans, is to consider life insurance. And nobody wants to talk about the death of parents or the death of a student. But if the parent dies as a co-borrower, that creates a burden for that student. Frequently, the student is obligated to find a new co-borrower or repay the loan. So you need life insurance. And then the second thing is private loans, even when the student dies, are frequently the obligation to repay them is still there. How horrible is that? You have a student who died and you owe the debt. So it's easier just buy $100,000 term policy or whatever it might be. It's so inexpensive. It's just so cheap. It's what you should do if you're a co-borrower. And nobody talks about this. And it's one of those things that's easy to buy. I don't sell it. I'm just telling you, it's a smart decision.
No, and we've talked about that before. I think there's one lender now, and I can't remember the name, but I think it's Earnest, that does discharge if the student dies, but every other private lender does not. Yeah. And so it's like a terrible burden that not only have you lost a child, because things happen, accidents happen, but now you're still on the hook for that debt. It's terrible. Yeah. When a term policy of, let's just say $50,000, $100,000, it's probably like $4 a month on a healthy 18-year-old. It's like nothing out there. And you can do it online just as easily today. There's a lot of insurance technology companies out there where you can, just like GradGuard, you go on their website, you click a few mouse buttons, and like 20 minutes later, you have a insurance policy. So
no health tests required. It's just simple. So, I mean, I think you're doing a really important job, Robert, of helping provide independent advocacy for families, independent views, right? You're really, I think, bringing attention to important topics. College is not risk-free, but it is worth it if you protect yourself.
Absolutely. And I think, leveraging a tool like tuition insurance and GradGuard and dorm room renters insurance / personal property insurance are just smart moves, because the cost is, it's insurance. And so I know a lot of, I'll say the number one thing I always hear when we talk about insurance, and this is on life insurance, on any type of insurance, is well, it's a waste of money if they don't pay you back. And it's but that's the premise of it, right? Is that you hope to never use it, right? It's there, but when you do use it, it pays out more than you can afford. If you can look, I always say too, college is driving a car, and the goal is to get to work. The goal is to graduate, right? You can get to work in a 1990 Honda Civic, or you could get to work in a brand new Mercedes. The real question is how much money do you have? And if you can afford it, cool. You can afford it. There's no.
All I know is I drove a Honda Civic to Arizona State and paid $450 a semester. So it's just not that way anymore. It's not possible. But yeah, I think that's a really good metaphor. It's a really good metaphor, and there is a lot of people that there are a lot of insurance that may not be relevant, and may not be a smart buy. I can't comment on all of them, but what I know is that college is much riskier than it looks like. I know the data. I'm happy to visit with people that are concerned. What we're trying to do is make college much less risky for families, and to make certain that everybody gets the reward, including the schools that work with us, which means successful, happy students that are self-reliant, independent. And that's really all of our goals, because that makes society stronger. That makes the country and the nation better as a result. So.
Well, and like we talked about at the top of the hour here when we started this, is that the data is the data. And when we know that 1 in 4 students don't return, like there is a huge financial cost to this, because college for most of us is not free. Some people are lucky to get the full ride, enjoy it, but for most families are paying something. And then when you see the stats in the news that, hey, we can't afford a $400 emergency, well, then how are you going to afford your backpack or your bike getting stolen? Or how are you going to afford if your roommate tries to put a hot pot on that, thing and catches your dorm on fire, right?
The candles, do not take candles to your dorm rooms. It's just, they say don't do it, but it still happens, and there are fires all the time. Yeah. It's just simple things. You're doing a really important job here, Robert, and I appreciate the conversation, and hopefully this has been helpful for your readers and your audience.
Absolutely. Well, John, I appreciate you joining me. Do you have any last thoughts on what families and students should know? And this could be tuition insurance, dorm room insurance related, but you have 5 kids and you got a bunch in college. And, this is the time. I like this time of year too, because you have the kids that are starting college. And then in literally a month, you have the high school seniors starting to apply to college, because they are thinking about making this decision. So, you've lived it. What do you have on this investment?
I'm right in the middle of it. And, the number one thing I'd say is ask your university and expect your university to disclose its refund policies and its terms and conditions and the limits of liability for living on campus. They have an obligation, just like any other consumer purchase. They're selling a consumer good. And you should expect the same type of transparency that you do with any other large purchase. And then secondly, ask them for GradGuard. The only way you get the best pricing and the best coverage is when your school agrees to make certain that every student is aware of the ability to protect themselves. The spread of risk is what keeps our prices low and makes certain that people are protected. We can't predict which student is going to have a concussion or get mono. We can't predict which one it's going to be debilitating to, but we know it's going to happen on a regular basis at every school. And the schools know this. And so if they're not going to provide a refund, then ask them for GradGuard. If they're not going to replace your stone damaged property, ask them for GradGuard. It's easy for them to do. It costs the school nothing. If they're not offering it today, they should be next year.
Nice. And then, if you don't, go to GradGuard.com and you can get a quote yourself, right? And it takes a few minutes, and you can at least make an informed decision. Like, know what you're going to pay, because like you said, I can't ever remember the price. It's like $100 for every 10,000 or something you borrow.
$110 for when a school offers a program. It's $110 for $10,000 of coverage, and most often, and that's just an affordable coverage. You got to buy it before school starts. But if you need like $30,000 of coverage, it's $330. I mean, so it's just a rate times how much coverage you need. By the way, we also have a national agency that is available. You can call us and get the phone number on GradGuard.com. And you can talk to somebody about how the policy works. You can read the policy before your purchase, and you can get a refund. All right, 24 hours after the purchase date, you can easily get a refund. We're happy to provide that refund. There's lots of ways to make money in the world. We want to do good. We don't really want to mislead anybody in any way. And we're happy to give you money back if you feel like this is not what we said it was. So
no, and that's great, because this is a huge financial investment for families, and I think, everyone just goes into this college conversation way too lax, and it's a huge financial investment. And, I even remind you, like, you might not realize it, because I've talked to a few people and they get their financial aid award and they're like, well, I'm not paying anything for college. And I'm like, actually, you borrowed $7,000 in federal student loans. When you click that I accept button, you realize that that's how you paid for school. And so they're like eye-opening that I borrowed, $7,000. I was like, yeah, remember when you went through all the terms and conditions and you just kept hitting I accept on your financial aid award?
You think about if you ever buy a car, right? And all the paperwork, all the disclosures of buying a car. There's nothing easier to borrow for than going to college. And
No.
And the terms and conditions are frequently not easily found. And so you are absolutely right. We really are in a buyer beware kind of market for everything. And that unfortunately includes education as well. And not because schools are being tricky. It's really just because it's a complicated decision. You're not making this very many times in your life. So you're going in it ill-informed. And that's why, again, the College Investor website, your service, your voice in this is helpful for people to make good informed decisions. And
right.
I think that's the whole thing. Just make an informed decision. If you can afford a cost of an extra semester, great. If you can afford to replace your backpack, great. I'm happy for you. But most families can't. And that's really where GradGuard comes in.
No, totally. And if you did borrow the student loan and you have to drop out, well, then you get the tuition refund. They'll pay it for you. And then you could use that to pay off your own loan, right?
Exactly. That's exactly the goal. The goal is to get you back on track and overcome kind of these real life things. And I so appreciate you getting what we're trying to do, Robert. And I think your audience is just getting better every year. Your engagement's just fantastic. The one thing I would tell other families, this is a community event, right? This is, sometimes you think about it as just you and your child, but it's really your child's roommate and their friends and their parents. And you're in this together, and trying to support one another on this journey is important. But that also involves telling them about the good tips, telling them about don't expect a refund. You can go to our YouTube site and see families, real interviews that we paid claims for, that literally they'll say GradGuard was a lifesaver for them. It gave them that do-over. I feel so proud about what we are able to do for families, because as you start to talk to families, you're going to find a lot of human stories about students who had to leave school prematurely, about a financial loss that they didn't expect. I was going to say,
and that financial loss sometimes keeps them from going back. So when you say your statistic is, 75% return, I don't want to know, but I'm sure it's not as great. Those that did not have any coverage, that had to leave.
I'd love to get to that. I'd love to get to that number. I only have our numbers at the moment. I think that's actually a really important factor that schools really need. You spend all this time and effort selecting a college and trying to figure out which school is best for you and your son or daughter. But the reality is you need to spend as much time evaluating the risks to the investment you're making.
Definitely. All right, John. Well, I appreciate you taking the time with me this afternoon. Where can people find GradGuard? I think we mentioned it a few times, but hit them one more time with it right now, and then we'll do it.
Yeah, GradGuard.com. Don't go to college without us.
Love it. GradGuard.com, guys. If you are thinking about tuition insurance, or if you have signed all your documents and you have not started your first day of school yet, and you're like, I'm very worried about this expense. What should I do if something happens? This is what you need to do. Go to GradGuard, look at their policies. It's not a big investment, but it can really save you a lot of money if the unexpected does happen. And sadly, it does. So, let's not go into it naive. It's a big investment. You know what to do. So, John, I appreciate you taking the time with me this afternoon. I hope that, some readers and listeners got value out of this. As always, if you have a question, you can leave it on the comments. This is also going to be on your favorite podcasting platform. So please subscribe if you are listening to the audio version of this and not watching our pretty faces on YouTube. So thanks, guys. I appreciate it. And tune in next time.
Thanks, Robert.